Hey everyone, welcome back to the channel. It's time for another impromptu video because Quadravest just updated their unit navs on their website for everything, and I figure there's a lot of chatter going on behind, DFN and DGS. These are the two biggest split share funds in Canada. They've taken a beating recently, and I see a lot of stuff going on in the Facebook. I even saw a post, DFN versus DGS, which one would you buy, or something like that. So I figure I'll do a video, and I'll try to, if you're maybe considering, if you're more of an opportunistic investor, you're trying to figure out what's the better buy. Is it DFN or is it DGS? Because there is a lot of upside potential for both of them. And let me just also give you a disclaimer that it's important to understand how these split share fund works before you invest in them. This is not recommendations or anything like that. This is just my personal opinion and education. Okay, so it's very important you understand that these are highly leveraged products and they do own very, very high quality stocks, which we'll see in a second. So huge opportunity, because DFN and DGS have recently, not been paying out dividends, or DFN is more recent, DGS has been a while. And usually what happens is that's what triggers a big sell-off with the split share funds, and then they become, on sale. So let's compare the two. We're gonna do a 5-point system. We're gonna go through 5 aspects and compare both of them. First, portfolio composition. Second, the management fee. Third, how many missed dividends. 4, the premium to discount percentage, which one is trading more of at a discount right now. And then last but definitely not least, the fund manager. So let's start with the first one. We'll go through the portfolio composition. Let's start with DFN. So DFN, it's a little bit hard to get the updated stuff. So there is a fund update as of August 31st, but we don't see the percentages, guys. We only see the top 15 holdings, but it's really high quality stocks, very heavy on the financials, okay, on the banks and some life insurance companies. But it's not just the Canadian financials. You also have some telecom and pipelines. You have things like BCE here. Here's TC Energy, Enbridge, TELUS, Thomson Reuters. So it's not exclusively the banks or the financials, but very, very heavy on the financials. And again, there's no percentage here, unfortunately. Pretty ugly document here. But I did find a quarterly portfolio disclosure from February 2023, okay? So just to say, this is August 31st. It's more updated. There's no percentages. This is from February 2023. And you could see, at least the percentages here. And, it's about 50% financials, okay? Here, maybe it could be more, because from this update here, you have 20% in cash, only 80% allocated to stocks. So a very, very big chunk in financials. And there is a little bit of, pipelines and telecom and other minor things as well, like Loblaws and Amera. But this is really all the assets. This is only the top 15. So that's it for DFN. For DGS, we could see everything. Their website is much better, fortunately for us. So if you click on portfolio, you will see the breakdown. So again, about 15 to 20 companies in DFN, mostly financials. Brompton is much different. It's much more diversified. You see the first ETF, the biggest position is their Global Dividend Growth ETF, which is Brompton's Global Covered Call ETF, which has all the best dividend stocks all over the world, primarily in the US. So, this 10% is basically stuff mostly outside of Canada. I think there's Canada in there. And then you have all the stocks, all the other stocks are Canadian, and you see here Tourmaline, Canadian Natural. You could go down the list, but there's everything here. It's really all the best blue chip Canadian dividend stocks that you really want to see, over 25 of them, okay? And you have the sector breakdown here. So unlike the DFN, it's much less in financials. It's definitely the number one sector, but because this is overall Canada, number one sector is always going to be financials. Number 2 is always going to be energy. So you have a lot of financials, a lot of energy here, but you have a lot more diversification. Restaurant brands, Dollarama, Couche-Tard, you have the railroads, all the The financials are there, of course. Loblaws is there. You got some utilities in here. So when it comes to diversification in the portfolio, I have to give the point to DGS by far. That's just my personal opinion. Of course, if you're a lot more bullish on the financials, maybe you'll like DFN better. My opinion, though, from what I could see in terms of diversification, DGS gets that point. Number 2, super easy, the management fee. DFN, it's 0.65. I found it in the annual report. It's 65 basis points. DGS is 60 basis points. So it's a little bit less, 5 basis points less for DGS. So DGS gets that point. So 2-0 so far for DGS. Missed dividends. This is of course a big concern, especially if you need a reliable source of income. Remember everyone, when the unit NAV of the split share fund, so DFN right now, the unit NAV is 1485. The unit NAV for DGS is higher at 1516. When this is under $15.10, because the distribution is 10 cents, it has to be at least $15, plus it needs to have the 10 cents to actually give out. So if the unit NAV is under 1510, there will be no dividend. So when it comes to the missed dividends, I actually wrote them here. DGS has 32 missed dividends out of the last 189 months, and DFN only has 5 missed dividends out of the 232 months. So DFN's been around 3 years longer approximately than DGS. So point to DFN for sure, no question about it here. Of course, remember that missed dividends doesn't have an impact on the total return of the fund. And when it comes to the total return, by the way, I'm not including that as a point because they're so close, and it could vary greatly. The total returns are very, very close between DGS and DFN. Depends how far back you go, etc. But I'm excluding total return because they're very, very similar. They have very, very similar composition. So missed dividends, that point has to go to DFN. Next one is the premium to discount percentage. So this is extremely important one. I've always say when you're buying a split share fund or a closed-end fund, what is the NAV? What is the stock price? You've got to compare the two, because the NAV is what it's worth. The stock price is what people think it's worth or what it's trading for. So DFN closed. I'm filming this on the 19th of September, right after market close, $4.44. How do we calculate it? You take the stock price, so 447. We're going to divide that by the NAV of the Class A shares, which we're going to assume is $14.85 minus $10, because this is the unit NAV. We got to take out $10 for the preferred share, which is always typically approximately $10. So it's $4.85. So we do 447 divided by 485 minus 1 times 100, 7.83%, almost 7.84% discount. Right, it's trading at a big discount. Not too big, but very significant, very rare for something like DFN. Very, very rare. Why is that at a discount? Because it's worth $4.85. You could currently buy it for $4.47. So it is approximately 7.83% off. DGS, let's do the same thing. So the DGS stock price ended at $4.85. So we do $4.85 divided by the current NAV, which, by the way, the current NAV is from September 14th for DGS, and it's September 15th for DFN. So right now it's September 19th, so it could be a little bit different, but we'll just do it approximately from that date here. So 485 divided by 514, which is right here, right? The net asset value of the Class A shares, minus 1 times 100. So the discount percentage is a little bit less than DFN. It's 5.64. So very, very close, but I got to give the point to DFN. I mean, it's just a calculation, right? DFN right now is currently trading more at a discount than DGS, but it's very, very close. Last but not least is the fund manager. So this is really more my personal opinion from what I've heard from speaking to different fund managers about Quadravest, about Brompton. Okay, again, my personal opinion. So Quadravest is literally one of the only fund managers, income-oriented fund managers, that have basically not responded to me requests for interviews. They just basically ignored me. So another thing to notice is that their website is extremely outdated. It's very, very clunky. It gives me the impression that they don't really care anymore. That's just my personal opinion again. And from what I've heard from all the different fund managers, excluding Brompton, okay, basically is that the upper management at Quadravest, and again, this is just speculation from what I've heard, doesn't really care anymore, right? They're three people, two or three people, they're traveling, they're on vacation somewhere. I heard that they don't really care, and you could kind of tell if you look at the website. They haven't really created any new products in a really, really long time. They have no ETF, so it looks like kind of they've given up and just managing what they currently have. My opinion, I personally like Brompton much better. I have a relationship with them. Obviously, they are a sponsor of the channel, but I've spoken to Chris Cullen, who's head of ETFs, and not only that, even Michelle, who's head of split funds and CEFs. They both came on my channel. Michelle was kind enough to come on the channel. We talked about almost an hour about split funds. Chris has come on the channel several times, 2 or 3 times. Very, very nice people. The website is much better. It's updated. The NAVs are updated every Friday, whereas Quadravest, it's always a complaint that everyone has. They don't really, it takes a long time for them to update their NAVs for some reason. So when it comes to the manager, the quality of the manager, I got to give the point to Brompton. Again, this is my personal opinion, and maybe this is not really a big deal for you, but it is for me, because from speaking to the various fund managers, haven't really heard any positive things, let's say, about Quadravest. Doesn't mean there's not good portfolio managers and good people there. I don't know. I haven't met them. I would love to meet them if they're watching this video. Please reach out to me. I want to do a Q&A with you guys to talk about Quadravest and talk about your fund, your covered call strategy, etc., etc. So I guess a 6 point we could talk about is the covered call strategy. So unfortunately, I can't really compare because Quadravest, there's no details whatsoever about their covered call strategy. Brompton, I could tell you that it's one of the least aggressive covered call managers out there, which means they're really they do covered calls to add some income, but they're really focused more, or they believe in the stock. So they don't do as much covered calls, and you could kind of tell as well. So they're not aggressive on the covered calls. But I gotta not talk about this because I really don't know Quadravest covered call strategy. So if we summarize the points here: portfolio composition, management fee, the manager, that 3 points for Brompton, 2 points for Quadravest when it comes to the missed dividends, a lot less missed dividends for DFN, and right now, currently, a bigger discount percentage. So the winner for me, and you guys know, I have DGS, I don't have DFN, I had sold it off, so it should be obvious again. My personal opinion, DGS, Brompton is the winner, but they are both great pickups right now if you're a higher risk, higher reward investor. And remember, the risk is not higher because of the stocks. They both have great stock quality. It's higher because of the leverage and the higher, which means higher volatility with these funds. So leverage goes both ways. They both got killed, but when the Canadian economy, the Canadian banks start shooting up, maybe when interest rates start getting cut, whether it's in 6 months, 18 months, 24 months, nobody knows, but they will go up fast as well. So people loading up on shares now are going to be laughing because they're booking insane yields when these start paying again, right? If you're buying DFN at 447, and that's another advantage of split funds. You always know it's going to be 10 cents a month or no 10 cents a month, right? So it's $1.20 times 447, which means that when DFN starts paying, if you bought it at this price, you're getting an incredible yield of almost 27%. Very similar level for DGS as well. So high risk, high reward. Remember, it's high risk because of the leverage, not the stock quality. In my book, the winner is DGS. That's the one I personally would pick up, but DFN is good too, especially if you like the Canadian banks or feel strongly about them. So let me know what you think. What is your opinion in this video? Was this video helpful for you? Let me know, and see you next time.